question. But I will do my best to answer for you. I would argue that retail has beaten institutional to this space already. That retail already understands the crypto markets far better than any institutional players understand them at this point.
All right, everybody, what is going on? Welcome back to another CYPRX Wealth 28 Club podcast. I'm your host, Cypress, here with my co-host, Mr. Aqua. In today's session, we want to really challenge everyone's mindset and get you all to fully recognize just how massive this digital transformation truly is and the critical role that DeFi is going to play in all of it. Financial institutions, as we're going to show you all today, are not just watching from the sidelines anymore. They are 110% interested in DeFi. Large organizations are now openly telling audiences to get involved in things like node operations, which we're going to dive into in today's video breakdown. And that signals just how big this space is about to become. Considering that retail traders have front run the institutions for years now, that is about to be over in the coming years, where any retail traders that get in after the next 5 years are not going to be able to say that they front ran institutions. You all here listening into this call will be able to say that, most likely, right? Again, I don't know your guys' investment into this space right now, but I know I'm going to be able to say that, right? I know Aqua's going to be able to say that. And I know lots of other people from our community are going to be able to say that as well. And once you awaken to that reality and you begin to see things from an institutional perspective, things like what they need, what infrastructure that they're going to rely on, it becomes extremely clear why research into the right technologies is absolutely essential. And so that's exactly what we're going to share today. We're going to share our perspective on what those technologies that institutions might choose might be. We're going to try to show you guys as much detail as we can on how they're already choosing said technologies, backed by deep research. You have to understand that there's a lot of opinions that fluctuate on the internet, like Aqua was saying, price predictions, this, and that. Everything that we're going to show you guys can pull up tabs yourselves and go validate. You guys can look at the same documents. You guys can read thoroughly through the same research. If you don't know where to find it at, tap in with us in the CYPRX private community, because all the links, all the documents, all the videos, everything that we share on these podcasts in the future or in the past, it's all in the Discord. The Discord is literally like a freaking research engine for crypto, Web3, and DeFi. It's crazy the amount of information that we share in our community. So lock in with us. Let's dive in, starting off with the first piece of my intro where I said that we really need to understand, to get the brain juices flowing, how massive this digital transformation is and the critical role that DeFi, i.e. digital assets having DeFi primitives and the ability to be lent out or borrowed against or used as collateral or in liquidity pools or this and that, how important that is. So don't take that from me, right? I want you guys to listen to industry leading experts. So to kick this off, and while we're waiting for more people to roll in, I'm going to play 2 video clips. One is a video clip of this gentleman. His name is Alex Cutler. He is the co-founder of one of the leading dexes on Base called Aerodrome. It is the platform that myself and Aqua, over a year and some change ago, decided to build the entire Wealth 28 Club DeFi platform on, at least the primary dex that we recorded a lot of the how-to DeFi content on, because we saw the vision. We saw how big Aerodrome was going to be before they became the leading dex on Base, right? Back when Aerodrome was trading sub, 50 cents type days. And we saw the longevity in their vision and how much money is going to come through DeFi rails. So this gentleman here talks about that in detail. And then I want to play a video clip from I believe he's the general manager, if I'm not mistaken. He's some high-end, Dan Donnie's the general manager, right? The DTCC, or he's like a director or something.
Yeah, he's high up there. I believe as director, though. Yeah.
Sorry, I'm ignorant on his credentials, y'all, but he's definitely some high-end individual at the DTCC. Excuse my ignorance on his exact position. Just go look that up, Dan Donnie. But here he specifically talks about the importance of how using digital assets as collateral, or just in general in DeFi primitives and alone, is what gives them their utility, gives them their use case. Digital assets themselves don't really have any intrinsic value. And so this will get your mind wrapped around how important it is to understand DeFi and why it's weird that everybody in crypto doesn't understand DeFi, because of how massive of an importance DeFi plays in the growth and onboarding of financial institutions into the crypto ecosystem, right? So take a second and just listen to these two videos while we're letting people roll in to get the brain juices flowing.
Been very orienting for us is something that Brian Armstrong shared on one of the past earning calls, which is that, Coinbase's point of view is that, and I believe this is right, I can't remember the exact, it was like in the next 5 years, they believe, about 10% of global GDP is coming on chain. And if you think about how big of a number that is, it's orders of magnitude larger than we are now. And we know kind of the case for why this happens, right? DeFi is better, right? You can provide institutional level scale products, services. They can be real time, they can be instant, they can be always on, they can distribute globally to everybody in totally permissionless ways. But if that's sort of the bet, right, that the space is going to grow by orders of magnitude, and that much of GDP is coming on chain, that means everything's coming on chain. That means things like global FX is coming on chain. That means real world assets are coming on chain. That means we're going to see a whole bunch of new, interesting primitives and products that begin on chain and then are distributed outwards to the world. And when you think about, the two verticals in which I think like Luke and I sit, right, of the exchange level infrastructure of this new on-chain economy that is servicing, 10% of global GDP, sort of lending, borrowing aspect of it. These are two core verticals of the on-chain economy and really essential rails, right? This is essential infrastructure for this economy. And so, as an exchange, we want to be the best.
So I'll pause it right there just to give you guys a quick breather. But he literally just said everything's coming on chain and that these DeFi primitives are going to be core essential aspects of this new financial economy. So just go do the statistics yourself. And this is why I'm trying to get you all to see that this requires a mindset shift. Aqua, bro, how many people right now out of the total crypto ecosystem participants are actually involved in DeFi?
Man, I would have to say probably less than 5%.
It's not a lot, right? There's like 500 to 600 participants, 500 to 600 million participants in crypto right now worldwide. And then out of that 500 to 600 million, there's like 8 to maybe 15 million participants in DeFi. But yet here you got the leading DEX on base saying, yo, all the world's money is coming on chain, and lending and borrowing are going to be two core key components of that. Why would you not want to learn about it?
Facts.
So, again, I'm just trying to get the brain juices flowing, but the juice isn't over yet. So let's continue to listen to what this dude here has to say.
This new on-chain economy, right? Basically servicing products and services that were previously unimaginable in traditional worlds or would require so much cost, so much weight to be able to create or distribute, create so much like legal regulatory overhead to distribute or to manage. They want to be able to do this seamlessly. So the first example here, of course, is the amazing product with Coinbase offering loans on Bitcoin via Coinbase.com. And you see the charts of adoption on that product, and it's basically a straight line up. And what we've heard, of course, from Coinbase is that the demand for that product from their customers is so high that it's mainly just scaling up all the DeFi liquidity and infrastructure to support it. They can't keep up with demand, and functionally, that is just them distributing more.
Yeah, bro, I saw your eyebrows go up. You heard him say that they can't keep up with demand, right?
Yeah, that's massive. And that's just retail too, right?
Bro,
that's pure retail. So
it's just retail at $4 trillion market cap, y'all.
With the small percentage of people, but damn, that's work though. I ain't mad at it, bro. I mean, it's just more proof. Borrowing and lending, it's massive. It's massive.
It is. And don't just take that from Aqua. Let's roll over here to Dan Donnie. Can you just do me a favor, bro, while I'm playing this so we can get Dan Donnie's credentials and Google that real quick so that way we can educate the people and we don't sound uneducated ourselves on the roll.
Yeah, hold on. I'll get it for us right now. I know it's a director or something, but let me find out for sure. Hold on.
I'm pretty sure he's the directing manager, bro, of the DTCC. Like, I just feel like that's his role. So this is Dan Donnie. And just long story short, in this post, I said here, just holding and trading digital tokens like XRP, Bitcoin, HBAR, doesn't matter. You name it. We're not maxis here. We're diverse. Regardless of what digital asset you claim to like or hold in your portfolio or believe in long term, holding it is not enough, because just holding the digital asset and hoping that everybody else in the world is just going to hold the digital asset doesn't give it any value, doesn't give it any utility outside of just speculative belief that the price is going to go up. And that's what drives its value, is just belief, right? Just hope. It's the same reason as to why the dollar is the way that it is, or fiat currency is used, is because everybody believes that it's money. If everybody tomorrow woke up and was like, hey, yeah, it's just paper, and then went to go try to withdraw their number balance out of their bank account for physical fiat cash, the whole banking system would freaking collapse, right? So when you understand that this new digital infrastructure is being built off of trust, it's being built off of use case and utility, you understand the underlying utility itself that DeFi brings to said digital assets, including now like XRP and Bitcoin, which DeFi primitives on those underlying assets and many others previously did not exist until just a few years ago. So I still understand why it's so hard for the XRP army or Bitcoin maxis to wrap their head around DeFi primitives. But the truth is that if you care about the underlying appreciation of an asset long term, you need to understand that the DeFi ecosystem that it builds out is essential to its longevity in this space. And if it doesn't build out good, solid DeFi infrastructure, it likely will not last amongst the ones that do, right? So what I see you got it pulled up. What's Dan Donnie's role real quick here? I'm adding.
Yeah, he's got like a dual name here. It's managing director and chief technology officer of the DTCC digital assets.
Okay, so we were right. Some high end can roll, right?
Yeah,
dude's important. That's all you need to know.
Yeah, facts. This is coming directly from the DTC or DTCC website. So yeah.
I feel like he's the type of dude that has like secret security around him all the time that you don't know about. But if you try to just go up and shake dude's hand, somebody would can like karate chop you in the neck and be like, "Hey, bro, you need to schedule an appointment." You know,
That's real, bro.
But they won't tell you. They won't tell you he's got some like secret. But because think about how many think about what this one man could do with a phone call.
I know. Very, yeah. I would have to say I have to agree with you, bro. That's definitely.
Who's Dan Donnie texting? You know,
exactly.
Who's he talking to on his Friday afternoons? All right, check this out. Let's listen to this video clip real quick of Dan Donnie. Let me reshare my screen. I love you guys are laughing in the chat. Look, it's not all serious here. All right, it's not all documents. We laugh sometimes at CYPRX. Okay, guys and gals, check this out.
They take assets. As I mentioned to you, the one right to win that DTCC has in this model is we are the record keeper for quadrillions of dollars of transactions, but for fundamentally assets under record, approximately $100 trillion worth of assets. So unilaterally, without the need to engage anyone else, we can actually make it possible to tokenize $100 trillion worth of value. No one else can do that efficiently. So we have both a right and a responsibility to do that effectively for the financial markets, because it unlocks so much among those things that it unlocks. So we're building out those rails to do that, to make it so that parties can, within seconds, convert any traditional holding into token form to conduct transactions. But tokens themselves really aren't game changers. They're just another database, a database with benefits to be sure, but just another database in the end. It's actually what you can do with tokens that makes the big difference. And the foundational transaction in finance is collateral. So most people think liquidity really comes from trading activity, that's what makes a difference, my ability to convert dollars to shares of Tesla. Yeah, that's important. But by far, that's a drop in the bucket compared to transactions in liquidity that have to do with borrowing and lending. So there are transactions. Repurchase agreements are the way that banks get liquidity. So they take assets, high quality assets like treasuries, and when they need cash, they post them as collateral and borrow cash from one another in a model called repurchase agreements or repos. That transaction is the most dominant transaction of any globally on a daily basis. over, I forget the number, over $20 trillion a day. I think it's even more than that. But anyway, roughly that amount is in that transaction. Well, turns out blockchain is the perfect technology. Perfect. It's like tailor-made. It's the killer app for blockchain to do collateral management. Why? Because you can encode the locking rules into smart contracts. Now,
Yeah, bro, $20 trillion a day, and people are still sleeping on DeFi.
Oh man. Oh man.
What?
Man.
Yo.
He said it was a drop in the bucket compared to what borrowing and lending is. That is so massive, bro. Like,
I really like what Shannon said in the chat. She said, hopefully Dan is talking to Marshall Hayner. I wonder if, because, bro, what's Marshall Hayner's biggest bag?
loan protocol, bro. Loan protocol. Loan protocol. And that's not by accident. That's you know what I'm saying? So, and it's loan protocol by a landslide if you look at the other trust lines that are in his wallet. So it's pretty, yeah.
It's pretty decadent, I'll say that much. So I've now showed you guys, as we have more people on the call, right, that, you know, this way of thinking requires a mindset shift. It's not easy to just understand DeFi and understand how big of a niche category it's going to be if you don't, number one, understand how big it already is, collectively speaking, in traditional finance. When I say it already is, I mean like the lending and borrowing niche in TradFi and how big that is. Everybody's always like, oh, cross-border remittances and all of these cryptocurrencies going to be used for cross-border payments to send one transaction over to the other place in the world. And Dan Donnie just said, like, that's cool. You know, trading activity is cool. Trading activity is exactly that. Like sending, if I send, you know, XRP to Aqua because he's in Australia and I want to send him some money fast, and then he turns that XRP into Australian dollars to pay himself out right through his bank account. That's just trading activity. That's cool. That's a lot. Don't get me wrong. Cross-border remittances is a huge market. I'm not denying that by any means, but why are people sleeping on what the banks are about to come in full force and use if they really want to adopt these digital assets? Is their ability to be posted as collateral, right?
Mm-hmm. Mm-hmm.
Massive. Yeah. And when you understand that power, and you're holding digital assets now, and you're like, this is the aha moment. You're like, this is what the banks are doing. And then you're like, I already have the power to do this. You're like, oh yeah, let me go learn about it. You know?
Facts.
So I said here, your net worth often follows your self-worth. If you believe you deserve abundance, you will make choices, you will take risks, and you will seize opportunities that reflect that belief. In finance, business, and investing, the first thing that you build is not your portfolio, it is your mindset. So in order for all of you listening to really get DeFi and then implement it properly and understand it, is you need to raise your worth. You need to raise in your mind that you are a higher being and you deserve more, because that's what DeFi gives you. It gives you more, right? If you're in your portfolio sitting here holding these digital assets and you want high prices, why wait? You can make money now. And if you accept that and you're like, okay, I'm open to that, I want to make that money now instead of waiting, that's what allows you to have that aha moment. And then you watch your reality really start to catch up to the innovation.
Yeah. Once it, I keep hearing it. I feel like we always hear it inside the Wealth 28 Club because there's always somebody on the Zoom call that's like, dang, now I finally see it. It finally makes sense. Right. And that's what, once you have that aha moment in DeFi, man, like it opens up your eyes so much more wider to what this whole crypto thing is. You know what I mean? So yeah.
Mm-hmm. Yeah. And it, you know, a lot of people are just biased towards certain digital assets, and that's what holds them back. Because if I'm being completely honest, to be involved in DeFi, you have to be very well diverse. You have to be diversified. You can't just be a maxi towards one asset, right? Because certain assets don't really have solid DeFi infrastructure yet to go out and use your digital assets in DeFi to generate passive income yet, right? I emphasize yet, but you know, if you hold a buttload of XLM, just as an example, there's not really a lot of solid DeFi opportunities outside of providing liquidity to generate yield on XLM yet, right? It's coming, but so what does that mean you have to do? You have to be diversified to learn about maybe like Solana, or go learn about Aerodrome, or go learn about, metal or go learn about XPR or something else in the meantime.
Yeah. I mean, it's like, dude, there's 2 dexes on XLM right now. What, Stellar X and the Aqua network. I mean, outside of that, there's no other options. You know what I mean? There's so much more work to be done and more, protocols and lending and borrowing platforms to be built. So got a ways to go.
It's coming, it'll just take some time. I got 2 more documents to just share with you guys while we're waiting to hit 1,000 live listeners, just to show you all again that we're not capping when we say this, right? In my intro, I specifically stated that you have to have a mindset shift by realizing how big this space is, but not only that institutions are 110%, or sorry, excuse me, let me back up. You have to have a mindset shift realizing how massive the DeFi opportunity in crypto is, but then you also have to understand that institutions are 110% paying attention. Well, don't you want to go where smart money goes? Don't you want to do what smart money does? Because they're the ones that move the market. And so if I can show you all that they are paying attention to DeFi, hopefully that'll motivate you to be like, maybe it's a niche category I should tap into, because Aqua and Cypress have literally showed me physical proof that I can just go backtrack and check myself that institutions are for a fact going to be using this, right? So check this out. This is the August 2025, the Productive Treasury, a corporate guide to integrating Ethereum and digital asset staking into core business infrastructure from EigenCloud and Liquid Collective. Just go look up who those are. Billions of dollars right there alone in those 2 names. Okay. So if we come over in this document and we read a little bit about it, on page 4, just looking at my highlights, it says, independent from traditional credit markets, with staking integrated as part of a diverse treasury strategy, digital assets are transformed from a passive store of value into a productive cash flow generating instrument. Analog to an internet bond, a valuable alternative to traditional fixed income products. Unlike traditional fixed income products, digital asset staking unlocks access to participate in and own the success of the global blockchain infrastructure. Getting ahead as a stakeholder today, while banks and institutions and brands and governments are increasingly moving towards adopting an on-chain stablecoin based and user-owned internet economy. So it literally talks about getting ahead, the banks and institutions, right? And it also talks about when you become a staker, when you become a liquidity provider, when you do all these things in the DeFi ecosystem, it actually gives you and helps build the success and a piece of the global blockchain infrastructure, right? This is huge.
And bro, and I feel like where you highlighted it with the red underline, basically metal blockchain to the T can make that happen to the T.
Which we'll get into in detail. I'm talking about in detail when we get into the juicy part about metal blockchain and how, remember in my intro today, I talked about technologies that we believe financial institutions will choose based off of their current use case and capabilities and what they're aligned with in terms of compliance and regulation. Metal blockchain screams that at the top of its lungs. And I'm going to show you guys that in detail today, right? So to continue on with this, just to give you a little bit more, here it talks about how MicroStrategy right now participates in the lending aspect of Bitcoin. It says MicroStrategy lends their Bitcoin to institutional borrowers, generating income from their interest, and uses BTC as collateral, preserving the upside potential of holding BTC while accessing liquidity to pursue additional opportunities. So remember what Dan Donnie just said, that this is exactly what institutions need access to. Well, now I'm physically showing you guys that they're already doing it, right? They're doing it right here. Says it. MicroStrategy lends out their Bitcoin to borrowers to generate passive income for them so they can use it as collateral and continue to pursue other opportunities, right? This is huge. Now this might not be on your favorite digital asset that they're doing it on right now, and they might just be doing it on Bitcoin right now. But imagine if 100 different altcoins survive long-term, or 1,000 different altcoins survive long-term. I guarantee you that we're going to be in a future environment where each of those coins in some way, shape, or form is used as collateral.
100%. 100%.
Right. Last but not least, it says here, for a treasury function now mandated, I repeat, now mandated to actively create value, holding a mostly non-productive asset like Bitcoin leaves potential returns on the table. representing a significant opportunity cost. The Bitcoin precedent established that digital assets could be held on a balance sheet. The next logical step is to activate those assets to make them productive. This sets the stage for the transition from passive stores of value to a productive economic infrastructure. Y'all.
Yeah, aka DeFi.
If what I just read to you, when you get off this call, if you don't know about DeFi and doesn't make you want to go be like, what the fuck is this guy talking about? Y'all, please just wake up and realize how massive this is going to be. There's going to be a certain onset of people in the future, I promise you, that just hold digital assets. Then there's going to be a second group of people that actively put them to work and understand the real value of them does not come from the price appreciation of the asset itself, but instead how you can use the asset. And those people will be the new 1%ers. The other people will be the 2%ers and the 3%ers and the 4%ers and da 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 da. But the people that can put their assets to work effectively and efficiently will be the new 1%ers.
Yeah, because it never stops. It's going to keep working for them. It never stops. So,
last but not least, the last document I have shown you guys that the large ones, the large organizations are the ones telling you this. This is a document directly from R3. This is Digby Try, global head of sales at R3 Labs. And in this recent document, shout out to the CYPRX researchers for this one, it says here, decentralized finance, i.e. DeFi, is maturing and regulated financial institutions are ready to participate with new innovations developing. TradFi is recognizing blockchain's potential to introduce new efficiencies and revenue sources that existing financial market infrastructure cannot provide. I want to highlight that word right there, revenue sources. That's a good key vocabulary word we're going to come back to. Long story short, I'm not going to finish reading this document because we've already gone on long enough, but this is a direct confirmation from R3 themselves that the DeFi ecosystem is maturing, institutions are ready to participate, and that innovation in blockchain tech is ready to introduce these systems in an effective and efficient manner to create revenue for these financial institutions, which you already heard Dan Donnie say that that's exactly what they need. Right? So now let's get into the tech. Now let's get into what solutions can these institutions utilize in the ecosystem to facilitate these DeFi primitives. So here I said in this post, yeah, this is we're going to get juicy, bro.
I was going to say drum roll.
2025. Y'all like that build up? Let me know in the chat if y'all like that build up right now, because that was a good build up. Yeah, I'm not going to lie. That was a good build up. Let me take a breath. Okay. 2025, most people still say that DeFi is a scam. Let's fast forward mentally to 2030. Everyone and their mom is most likely going to be using DeFi. However, you were using it in 2025 because you locked in. And during that entire 5-year period, your bag's not only pumped, you compounded all your staking yield daily, you looped your rewards into farming pools daily, and you harvested those rewards and put them back into staking positions daily. Imagine where you're going to be in 5 years if you, again, not financial advice, just participated in something like I just said. Power of compound interest is huge. And if we come over to what XPR Network said in my reply to that post, powered by smart contracts on the XPR Network, keeping in mind what Dan Donnie said, that the ability to lend, to borrow, to post digital assets as collateral, right, is one of the best use cases for financial institutions. Paul Gray said here in this post, August 27th, 2025, imagine having the financial freedom to instantly open a line of credit using your digital asset holdings as collateral. No forms, no approvals, no drama. And you can do that right now on Loan Protocol, built out on the XPR network.
Massive.
So that leads me over here because I said again, picture this, it's 2030 and you're living a lifestyle that you once dreamed of or dreamt of in this case, because in 2025, you took the risk, you started investing, you opened your mind to DeFi, you generated yield, and you compounded those gains daily instead of waiting for the bull run profits. You made profits daily. You worked in silence, you made the tough calls, and you trusted the process. Now the compounding of your discipline, your patience, and your vision has paid off. Success didn't just happen like all these people are dreaming it out to be, like they're just going to become rich off of price appreciation. And instead, in this scenario, you created success yourself because you started making your portfolio working for you. You started paying yourself and you started doing what it takes. And underneath of this, an individual asked, who has an easy DeFi platform with low to no risk? And not to shill you guys the Metallicus ecosystem, but I said there's no such thing as no risk because there isn't. There's always risk involved, and that's something you have to be able to embed into your investment strategy. I can't do that for you. You have to know that. But I said here, I would look into the Metallicus ecosystem, right? Because Aqua, if I'm wrong, correct me, but you can earn on every digital asset in the Metallicus ecosystem in some way, shape, or form right now.
Correct, bro. 1000%. I mean, XPR, you could stake it right in your WebAuth wallet. It's like, why wouldn't you not take advantage of that? You got the Metal X, platform where you got the farming pools with a bunch of different pairs. And then you got the loan protocol where you can just be a lender and lend out, XMT, right? So pretty much, and about the staking side of it, but every single digital asset for sure you can put to work. And a lot of, both ourselves here and a lot of people in our community have all of our digital assets working right now in this ecosystem, like as we speak. So, but yeah, go ahead. I'll let you continue.
No, I loved your rant, bro. And I'm just going to go on and cap on what you said because you missed one, the ability to run and generate nodes on Metal blockchain.
Oh, yeah, definitely. Yeah, definitely. And I have one too, right? How did I forget that? So, but yeah, I mean, there's just so many ways right now that exist right now at your fingertips. So, I don't know. I feel like, something I was thinking about too while you were speaking was just like, people, and we talk about it all the time as far as like, why would you have an exit strategy and an exit plan? Like, really, you got to just train your mind and look at different, yielding, options, especially in the Metallicus ecosystem, and start looking at your portfolio on how it can pay you and what type of salary you want for yourself, as opposed to reaching a certain dollar amount and then you're going to take profits. I mean, if you have a really good game plan for those profits outside of crypto, then, good luck. But like right now with this new tech and everything that we're learning, like these are mini businesses, So, but yeah, I'll give it back to you.
Well, I just couldn't agree more with you, bro. And, at the end of the day, too, since we're on the topic of node, and I want to pause real fast before we continue and comment on one of the comments in the chat, because I want to motivate the individual that posted it. So don't let me forget that we're on the topic of nodes, right? Because we talked about, or you specifically mentioned how we are in this community and thank God to an individual that in the private TDBN space came in and was like, oh, let me show you all how to run some nodes. Now everybody in the CYPRX Wealth 28 Club is running nodes on Metal, right? So we get into that, but I want you guys to hear from an individual representative that has credentials actively at the CFTC, the World Economic Forum, the DTCC, and plays a lead role in Franklin Templeton, mentioned to you guys that, you're going to need to run a node in the future. Like if you want to be a participant in this digital asset space, not only as an institution, you're going to need to run a node. It's going to be a part of, laying the foundation and having regulators trust you as a participant in this space. You're going to need to run a node, right? So I want to play that. And then I want to also cover what I said before about how retail is beating institutions. Why I'm showing you guys all this is because I've physically shown you guys proof, not only that DeFi is going to play an important role and how massive it's going to be and how big the lending and borrowing space is in traditional finance, but I've also shown you guys documented proof from organizations in the space saying that they're coming to DeFi, right? That it's going to be mandated. Do you remember the documents right here? It says it right here. It's going to be mandated, right? It says right here, for a treasury function now mandated to actively create value holding a mostly non-productive asset like Bitcoin, right? It's going to be mandated to earn yield on it. Like, come on now. So coming over here to this, I want to cover Bobby's post, right? As Bobby said, he said, if you're broke as fuck, me, and have very little to start off into DeFi, do you think Metallicus and XPR with a farming loan protocol and XPR staking is better than ZBCN staking, right? First off, Bobby, I want to pause right there, brother, and I want to motivate you. Don't ever label yourself as something like that, right? Because if you're typing out "I'm broke," if you're typing out then obviously, of course, that type came from a thought, right? And you turned it into a tangible reality by typing it out. So avoid all that. Scratch all that. You're not broke,
Yeah.
bro. You're not broke. You think you're fucking broke because you don't have a lot of this fiat bullshit that these elites make out of thin air? Come on now, Bobby. You're better than that, brother. You are a finite being. Like, you're not broke. And if you have knowledge and education, that is what makes you rich. How you're going to apply that knowledge and information is how you can expand that richness and that wealth into everlasting abundance. So if you have knowledge, you're wealthy. If you have information, if you apply that properly, you are rich. Don't limit yourself by saying that you're broke because you don't have what the matrix made everybody think makes them rich, and that's fiat, right?
Yeah.
So
Yeah.
I just wanted to throw that out there. But to answer your question, um, you know, I can't sit here and tell you, right? Because there are some things that Zebic does, if you pay attention to them and you like them, that maybe Metallicus doesn't do or doesn't do as efficiently or as effectively. I'm not here to debate that. I'm here to just show you guys that the technology exists. Whatever route you choose to take on what tech you implement in your strategy is completely up to you based off of your own personal preference and your risk tolerance. My risk tolerance might be different from yours. So I'm not really here to be opinionated on that. I would definitely, at least at a minimum, if you don't have the money to diversify into another ecosystem and you're bent towards one ecosystem, don't cut yourself short and split yourself up and try to diversify in a bunch of, putting too many eggs in your basket, but at least read the documents, at least prepare mentally by learning the technology and understanding how to implement it. So that way, when you do make more fiat currency or when your financial situation does change, and hopefully you take an effort to change that, you have the knowledge, right? So I hope that, I don't know, man, that comment when I see people talk about themselves like that resonates with me like that, because before I became financially free, before I became financially stable, I used to have that mentality. I used to say, fuck, I'm broke, all this shit. And then I realized, damn, it's a mindset shift that unlocks that level of I'm not broke anymore.
Mm-hmm.
You
Yeah.
know?
Yeah.
Anyways.
Yeah. No, I think you did a great job. Well said. And yeah, I think you're doing well as well, Bobby, because you're here and you're talking about things that pretty much the entire world is oblivious to. And yeah, just keep going, bro. Keep going. Don't stop.
100%, man. 100%. You are, even if you're not actively involved in the things that we're talking about today, you at least have the awareness of it. And that's what starts to get the ball rolling. That's what opens the door. So you have the key. Now it's just your job to put it into the door, open the door and walk through it. Right. All right. Back to what we were talking about, nodes. So Aka was talking about how our community is heavily involved in, like, everybody is kind of like funny. Everybody's like, yo, how much is in your node? Yo, what's your node at right now? Like, it's kind of like a, it's like an inside competition right now on who's got the best metal node. Listen to this lady. Her name is Sandy Qual. Again, she has active credentials at the DTCC. You guys can go check this on her LinkedIn profile. I don't have it pulled up, but you guys, anything that we're saying on this call, you can fact check. DTCC, CFTC, World Economic Forum, she plays important roles at right now, presently. And then she also is a lead representative at the Franklin Templeton. Okay. Two things she says. One, retail is beating financial institutions. So think about that in terms of everything that we've showed you so far. Second thing she says is she talks about how you will need to run a node in the future. So let's just play this back to back.
A different point of view on this one, and I feel like it's kind of a cheat because you should really be answering this question. But I will do my best to answer for you. I would argue that retail has beaten institutional to this space already. That retail already understands the crypto markets far better than any institutional players understand them at this point. And that the capabilities and the functionality that the institutional financial services markets are going to need to develop are all coming now from the retail side. The gamification, the social interaction, the inclusion of short form video as forms of instruction, the ability to take actions on one's own that equate to what institutional players can do today, the ability to transfer assets peer to peer. These are all activities that retail are used to, and they operate with day to day in their everyday life. It's our institutional industry and it's our institutional rails that have kept us from keeping up with that level of innovation.
We can.
So come on, Bobby, are you really broke, bro? Because this lady just said that you're beating the institutions, you know? So come on now.
Facts, dude. Yo, you know, it's crazy though too, because what she just said, when you think about like how metal blockchain is built, and these guys, let's just say, you know, these banks, institutions that Metallicus has, they say, hey, you know what, we want to have our own blockchain, we want our own stable coin, right? Well, to have their own blockchain, that requires them to run a subnet, and running a subnet requires you to have 5 nodes. So by default, when these guys say yes to their own blockchain, they have to have 5 different nodes, right? With a minimum of 2,000 metal in each 5 of those, because it's 2,000 minimum to have a metal node. So yeah, I feel like, man,
this doc that I'm going to pull up here in a second, you already just went over exactly what I'm going to talk about, bro, because this document. So remember in my intro today, I talked about how first our goal was to get you guys to see that the opportunity here in DeFi is so massive and you're leaving so much on the table by not participating. Even if you're just not participating with your education, because again, our goal in the Wealth 28 Club is not to show you guys that everybody should go out and deploy into DeFi, because that's not what we recommend, because you will lose. What we do recommend is that you educate yourself on it. We've shown you guys why it's important to do so, because it's one of the biggest opportunities in crypto. We then showed you guys why institutions and how they're getting involved in that they are for a fact, right? The portion where we start to talk about in the documents is I want to show you guys from an institutional perspective, the technology that they say they need, right, is exactly what Aqua just mentioned. The ability to embed these solutions into their infrastructure, into their interface, like a plug and play solution, without having to go and do all these things behind the scenes themselves, right? By partnerships, by integrations, and all these things. And I'm going to show you all in terms of, from again, an institutional perspective, how Metallicus and the metal blockchain aligns with that exactly, tit for tit, like crazy. So back to this real fast, because I don't want to get too ahead of ourselves. Back to the nodes. All right. This is, again, Sandy Qual mentioning that you will need to run a node. So just take a second here and listen.
Production, that may be a mistake that you guys have made or you've seen made that you would recommend people don't make as we look to move this forward quickly?
I'll start out. I think that you need to understand, I think one of the most unfortunate branding exercises ever was when we started calling them cryptocurrencies, because it created this expectation that somehow they're a currency and they can be spent on things. And you need to understand that it's a way of buying block space on the ledger. That's really the purpose. And so you need to hold these cryptocurrencies in your treasury if you're going to be recording trades on a ledger. And if you're holding these assets in your treasury, you need to figure out what you need to do to hedge against them. And that's when you need to figure out that you need to do node operations. So I think that there is this whole cascading.
Bro.
Yo, at the very beginning, did I catch that? Like, did she like was she behind, you know, spreading that around, calling it cryptocurrency? Because like, how does she like? That was crazy, right? Who's behind?
This whole entire piece that she just said, like, if you're an institution and you want to hold crypto in your treasury, which we know all these freaking institutions right now are scrambling around to figure out how they're going to hold crypto on their balance sheet in their treasury. You guys know that. I don't have to prove that to you. Just go look at the freaking news headlines right now, y'all. She just said, if you want to do that, you're going to need to learn how to hedge against the volatility in crypto. Well, how do you do that? You run a freaking node and you earn freaking yield.
24/7. It's basically a faucet of liquidity coming in for you. Like why would you leave money on the table like that? Like it's a no-brainer to be running a node in so many ways.
There's hardly anybody else on the internet what's showing you what me and Aqua are showing y'all in this call alone today, right? This is crazy work, y'all. And look how many views this. I bet you this has like less than 200 views. Like, I'm just going to predict it. Let me look. Oh, wow. I was wrong. 1.1 thousand views. Still, that's still not a lot. 3 weeks ago and only has 1.1. 1,000 people have seen this. That's it. Come on now, y'all. Y'all are so far ahead. You know, you go look at TikTok right now and there's freaking dances on there that got 34 million views right now.
Yeah, bro. Literally.
So coming over here, just to show you guys, I said longevity in this space isn't built on hype. It's built on infrastructure. That's why our private community is leveling up. Most metal holders here in the CYPRX All 28 Club aren't even just holding anymore. They're running freaking nodes. Real participation, real ownership, and we're not stopping there. The next step is subnets. We got live screenshots from inside our private Discord of people saying, yo, my node's full. Yo, I'm running a node. Yo, this is awesome. This is great, right? This is the future. Okay. And when you understand that, it motivates you. If you can't participate, learn about how you can, because that's what's going to set you apart from the rest of the people in crypto that think they're going to make it from the people that actually do. Showing you guys that large organizations are doing this now. Check this out. I'm always bringing you guys documents. BTCS Inc. further increases, this is from July 9th, 2025, to again show you guys that institutions are doing exactly what Sandy Qual just said institutions are going to need to do. So you don't think I'm crazy and making this shit up. This further increases target funding at $225 million for a strategic Ethereum purchase using DeFi and a TradFi flywheel. BTCS Inc., a NASDAQ-listed company, short for the Blockchain Technology Consensus Solution. The company's vertically integrated operations, including solo staking through validator nodes and block building, are central to its approach. This activity not only generates reoccurring crypto-native revenue, but also enhances long-term value per share by compounding ETH-denominated returns. And then in this same document, they give a freaking picture, which literally looks like one of our CYPRX Wealth 28 Club PowerPoints. And it literally goes over this DeFi flywheel that they're participated in. And right here, it talks about how they're running and operating a solo validator node.
Dang. Yeah.
And this is $225 million, y'all. They're not going to, this is $225 million is still baby money.
Super baby money. It's peanuts.
So what's the, what's a Solana node or whatever, what is that stake? I don't know. Let's just say, I think Solana staking in general is what, 6% or something on average?
Yeah, somewhere around there. Yeah.
So what's 6% of $225 million? That's how much money this organization is going to be making per year.
Yeah, 100%.
What is
generating
that?
Yield? Let me do the math. Hold on.
Let's see if we can do it faster. 225.
Go for it. Yeah, you're gonna get me faster. Calculator, I had to get it started, bro. You probably already had yours up. Shit.
Yeah, 15 million fucking dollars a year, bro. Doing nothing.
Nothing. Just generating.
Just securing the network. Wild. And so let's say, for example, there is a bear market and these organizations choose not to sell, which a lot of them aren't. They're just going to hold the digital asset to secure the network and stake it. Well, that $225 million in revenue that they earn from said, node generating activities, it's obviously, of course, going to fluctuate depending on the price, but still what they can do with that is they can use it for business activities. They can use it to pay out their employees. They can use it to expand their businesses. They can put it back into buying Solana at a discount or Ethereum at a discount, right? There's like an infinite amount of demand that's about to come right now for DeFi. I don't think people understand just because of looping.
I mean, smart businesses are going to take money that they save for the business. Even mom and pop shops can have the same thing. Like if you implement DeFi into your business and generating more cash flow with the business's money by putting it to work in ecosystems like this or strategies like this, think about how much more massive you can grow your business and how much more ahead you're going to be against the competition, because now your business is now getting, instead of having that one, retail cash flow when your business is open, but now when the business is closed, now the money is, you put it into a node and you got a node that your business invested in, and that's generating more income for the business. Hopefully you guys are picking up what I'm putting down, but implementing DeFi in so many different ways. Like, even if you're like, you know what, I already run a business over here and I already do this and I'm already good. I mean, you should still take a look at this 100%,
When everybody finds out that they can pay their bills, live a more comfortable life, pay their employees if you're a business, expand business revenue, expand business endeavors, pay for freaking trip, pay for this, pay for that, all with DeFi money. Oh my gosh, bro. It's gonna be gnarly what happens. Gnarly what happens.
Gnarly, bro. Restaurants, bro, like restaurants, most restaurants, they operate, we hear about it, super thin margins. With this new tech, oh my God, restaurants can really, tap in with the robots on the retail side, right? And then tap in with DeFi with, running the finances for the business.
You know what's crazy, bro, is we've actually, just because what you just said made this click for me before I get into this document, we've heard people with credentials in this space, like Stacy Warden from Algorand. I know I've played a video of her. I've played a video of Christine Moy from Apollo, and they've said pretty much the exact same thing, that there's going to be a future where you're going to be able to take your digital assets, earn revenue off of them in terms of passive income, then take that passive income and that'll be what you're spending, and you'll earn up until the last moment that you spend. Then when you hand that transaction over to, let's say, I think they use the Starbucks example a lot. I know you've heard that. And they're like, well, then when you give that digital asset to Starbucks, then they take it and then they start earning yield on it.
100%. Bro, this is exactly, bro, to the T. Like,
it's going to get to the point in the future where if you're not doing that, holy shit, could you fucking imagine?
You're going to get smoked. You're going to get smoked. You're going to get smoked because 3, 4, 5 years down the road of these businesses doing this, and now their streams of income coming in for that business. Think about, the smart people that are going to continue to put back into their business and grow it, and the type of tools that they can do ahead of their competition. The competition is never going to catch up. They're just going to end up getting gobbled up because these guys are just going to be big sharks in the game. You know what I mean? So
I don't know when you said the word gobble just like that, I fucking started thinking of a turkey running around like blah, blah, blah.
No, I was thinking like, you know what I mean? Like a whale that just comes up and just gobbles like a whole fucking pod of fucking fish. You know what I mean? Like,
man, going out. They're done, bro. They're going to fall, they're going to fall victim. It's crazy. So because you talked about the tools, right? I want to now fixate everybody's attention on that because we're not done with the juice yet. I know we got on a tangent there. So we've showed you all the proof so far on why you should be paying attention. Now let's talk about the tools that financial institutions are going to be able to utilize and implement, i.e. these new digital technologies like blockchain and digital assets, to create these revenue streams and embed these DeFi financial primitives into their core banking infrastructure. So this is a document from PCMI, Payments and Commerce Market Intelligence, from June 2025, titled Unlocking Revenue, How Banks Can Make Money with Stablecoins Through Strategic Partnerships. Then if you come down here, it says, and I'm just going to read a couple of different highlights. I have 4 pages of highlights for you guys, but it says, the implication is clear. Banks that move early can gain not only operational advantages, but also competitive edges in revenue generation, capital efficiency, and client acquisition. So what exactly did me and Aqua just say? These organizations, including retail participants that do this now, they're going to get so far ahead of the normal people and businesses that aren't. This is a race, y'all. This is a competitive race. Go look at every other fourth industrial revolution that has ever existed. The people that were stagnant got left behind, and the people that weren't became the new 1%. That's the same thing that's happening now. And if you think it's going to be easy, it's not. It's going to require a new way of thinking, much broader than just buying and hodling.
100%. 100%. Like the people that go and get investment money and then they run out of that investment money. I mean, the smart ones are going to go get investment money and then have strategies in DeFi where now, okay, let's create a cash flow for the business and let's bootleg strap this business with this small cash flow coming in. But the initial of all these investments, think about that pitch too. You know what I mean? Like, bro, like, people are always pitching people for money, right? In the business world. Think about that, pitching, hey, we're going to put the money to work here, create cash flow while we build this business. If it doesn't work, then, hey, you know what I mean? Like, there's just, my mind is going crazy with like the amount of ways you can take that.
That's why I said looping is going to be the new sexy in the future. Like, because you're going to just be able to loop things in so many different ways. You're going to be able to loop some yield here, loop some profits there, loop your freaking real estate portfolio, loop this, loop that. It's just going to be a loop freaking fly, like that document said, a flywheel.
Yeah. Yeah.
This is literally what the future is going to look like, the document that I had right here. And you can, like, this physical proof that institutions investing $225 million into this space are already doing it. Let me put it this way. Imagine two portfolios sitting next to each other. You got a cold storage ledger with $1 million in XRP, and the picture, the infograph, pretend it's pulled up. It's just dormant XRP sitting there doing nothing. And then you got the second portfolio sitting next to it with this infograph and the XRPs flywheeling, right? What portfolio is going to outperform? It's going to be this one.
All day, every day. All day, every day.
And that's all you need to see to believe it. You just need to be able to see it. Once you see it, you can't unsee it, right? Back to this document. I don't want to get off topic. This document says, in 2025, we believe that every institution that moves money will need a stablecoin strategy as more players in the payments ecosystem explore this powerful new technology. Directly from Chief Product Officer and Strategy Officer at Visa. Now, do you guys know, since we're talking about the technology aspect of this, September 2nd, 2025, what Metallicus was just chosen for and named as a finalist for 2 2025 CU Credit Union Times Luminaries Awards? Well, one of those things, it says right here, Metallicus was named a finalist for its ability and custom stablecoins to generate and create custom stablecoins for credit unions, a first of its kind solution enabling credit unions to issue branded compliant stablecoins. So here's a freaking document right here. So now we're trying to show you guys the technology, right? Here's a document from an institutional perspective saying every institution in the future is going to need stablecoins, right? And here it's talking about how they're going to be able to handle a competitive edge in revenue generation with these stablecoins. And here's a technology like Metallicus, Metal Blockchain, that can provide these solutions. But we're not done. Let's go back to this document, show you some more proof. So here, we're going to really start to pay attention to key vocabulary, okay? Because here, actually, let me go up real quick. Let's see, number 2. Okay, got that. Number 5. All right, so page 5. Plugging into the stablecoin ecosystem, a partnership spectrum for banks. Engaged with the stablecoin economy does not require banks to issue their own digital currency from day one. In fact, the most effective strategy start with strategic partnerships is allowing banks to integrate gradually, beginning with reserve custody or fiat on-ramps and eventually moving toward a co-issuing their own token. So the two vocabulary words that I want you guys to pay attention into this is embedded and fiat on-ramps. So if we continue down here, it says banks can offer stablecoin issuers access to fiat rails, compliance tools, and payment infrastructure. This middleware approach doesn't require banks to issue or integrate stablecoins directly, but instead monetizes their role as infrastructure providers. Banks can embed any stablecoin, not just as one they issue themselves, into their existing mobile app, business portal, or treasury tools, allowing customers to transact, convert, or hold stablecoins directly within the bank's interface. Y'all, this is crazy. Why? Because this is exactly what the Metal blockchain and Metallicus provides. Look at this. So this is an AI tool that analyzes these PDFs, and here it says, this document emphasizes that stablecoins and tokenized deposits can generate interest and income and provide a foundation for new revenue streams. Metallicus's customizable stablecoins for credit unions enables credit unions to issue branded compliant stablecoins, which can serve as a loyalty tool by offering members a digital asset tied to the credit union's brand, potentially increasing member engagement and retention. Then it talks about here how the report discusses embedding stablecoins into core payment infrastructure to facilitate instant secure transactions. Well, MetalPay for credit unions platform allows members direct access to buy, sell, and manage digital assets, facilitating real-time P2P payments, aligning with stability, securing the immediacy described in the document. So let's continue to just show this a little bit more thorough. Look down here. This is the Product Innovation and Mobile Banking Award that Metallicus just got just the other day announced for. And look at what it says. This integrated API. Oh, sorry. Thank you so much for reminding me. It says here, integrated API deployment. This is the article from September 2nd, 2025. Embedded MetalPay directly into their digital banking platforms via integration with core and digital banking providers. This is what MetalPay allows you to do. What did the document say? It says it right here. These banks into their core existing mobile apps, business portals, and treasury tools, allowing customers to transact, convert, or hold stablecoins directly within the bank's interface, right? They're going to need to be able to embed this directly into their own infrastructure, right? If we come back here to the document, both options position credit unions as trusted providers of digital assets while creating new revenue opportunities through transaction fee sharing, right? If we come over here, back to the document, I want you guys to pay attention now. If we go down to number 9, here's some more vocabulary. It specifically mentions the bank's ability to plug into fast-moving stablecoins. So here it says the insight is clear. Banks already possess the assets needed to win: trust, scale, regulatory credibility, and deep client relationships. What is needed is not reinvention, but alignment with the right partnerships where banks can plug into the fast-moving stablecoin space in ways that reflect their strengths and ambition level. If we go back up to page 5, I want you guys to see where it says fiat on-ramps right here, right? It says engaging with stablecoin economy does not require banks to issue their own digital currency from day one. In fact, most effective strategies start with strategic partnerships, allowing banks to integrate gradually, beginning with the reserve custody or fiat on-ramp. So their ability to provide these plug-and-play solutions, says right here, plugging into the stablecoin ecosystem with fiat on-ramps. And then right down here, again, key vocabulary. What does it say? Banks can plug into the fast-moving stablecoin space. Well, y'all, check this out. Shout out to XPROG, plug-in option. Banks can plug MetalPay right into their existing online banking system so customers can use it without any extra steps. If you come over to the freaking website, says it right there. A fully customizable plug-and-play cryptocurrency fiat on-ramp built to your specifications and connected directly to the digital banking network. This is the same exact vocabulary in this document. They can plug into the fast-moving stablecoin space. They need the ability to be offered fiat on-ramps right here. It says it. What does MetalPay offer? Right here, fully customizable fiat on-ramps right at the top. This is physical proof that Metallicus has the technology right now that banks need to embed blockchain tech into their core infrastructure, right? And it doesn't stop there, because Akko was talking about subnets earlier, right? So if we come over here, I plugged in the Metal blockchain white paper and I asked it the question, does Metal allow banks to build their own interfaces? Because again, if we come over to this document, it mentions here, banks can embed any stablecoin, not just ones that they use themselves or issue themselves, into their existing mobile app, business portal, or treasury tool, allowing customers to transact, convert, or hold stablecoins directly within their banking interface, right? So they need this ability. And if we come back over here to the Metal blockchain white paper, using this AI tool where you can just put in the freaking PDF and ask it questions, I said, does Metal allow banks to build their own interface? And it says, Metal blockchain allows organizations, including banks, to build their own customizable interface. Its flexible subnet architecture and virtual machine support enabling developers to create tailored applications and user interfaces that meet specific organizational and regulatory requirements. And it gives you the direct pages. And right here it says, The subnet architecture of Metal blockchain makes it easy to manage regulatory compliance. As mentioned earlier, a subnet can require its validators to meet certain requirements, such as being located in a specific country, passing KYC AML checks, or holding a certain license. And it goes on to talk about exactly how all of this can take place on Metal, right? This is freaking huge, y'all. This is like direct showing you guys the technology correlation after having shown you guys that these financial institutions are 100% interested in using this technology. Aqua, I'll give the floor room to breathe, and then I have one more document to show you guys.
Yeah, bro, this is major. I mean, I love how you're tying this all together. I mean, it's one thing to be talking about it and showing, but like it's another to tie it, make it come full circle like this. I mean, and Metal blockchain is 100% aligned for all of this. And to be quite honest with you, I don't know any other projects or any other digital assets that are this aligned, that have this much alignment. I don't know. Am I maybe like missing something out there? But I feel like this is the most powerful ecosystem to be aligned with everything you're going over right now.
Not the shillet, but I'm gonna be completely honest with you, bro. After I started doing research over the past couple of months, I agree with you. If I'm being completely honest, because they align with everything. It's not just one thing; it's everything. It's like the entire spectrum under the sun that institutions need. Metallic has it.
Boom, and the fact that they can customize it, adopt it as their own, and put their name on it. Right? It says no third-party names anywhere, so it's going to be XYZ Credit Union. Borrowing and lending digital assets, everything that we see on MetalX, everything we see on the loan protocol, the WebAuth wallet, it's all adoptable for these banks and credit unions. So.
When you get into showing the what was it, the things that you had to share, what are they called? Credit the trust lines.
The trust lines on the XPR chain.
Yeah, when you start showing the trust lines and you start to think about how these institutions, these credit unions can just take the technology and just stack it onto their interface, and then it's just, it's
already low key happening. That's what I'm going to show. These trust lines prove that they're already creating their own stable coins 100%.
100, yeah, it's for a fact. And then, you look at the regulatory aligned compliance, or the regulatory compliance alignment of the Metal blockchain, which I covered in this post. And again, I'm just here trying to show you guys the documented proof that everybody can go check themselves. So I said here in this post, the Global Cryptocurrency Regulation 2025 report makes it clear. Compliance is no longer an afterthought. It must be core infrastructure. Identity attestation, jurisdictional whitelisting, audit-friendly data flows. By mid-2026, Tier 1 jurisdictions are expected to adopt formal RegTech accreditation frameworks, which licensing APIs and compliance registries, enabling institutions to access crypto markets without relying on manual due diligence. Here's where Metal blockchain directly supports these compliance requirements. So they offer compliant subnet. Validators can be restricted by jurisdictions required to pass KYC and AML or hold licenses. They have private subnets. Predefined validators will allow organizations to run private regulatory-friendly networks. They also offer regulatory flexibility where institutions can design the subnet tailored to meet local compliance obligations across multiple different regions. So while regulators are preparing new standards, Metal blockchain already delivers all the compliance architecture that they're describing and making it one of the most efficient and most effective future-ready infrastructures for institutional adoption. So here's the document right here. This is the Global Cryptocurrency Regulation in 2025 report. And right next to it, I have the Metal blockchain white paper. From the RegTech conference report, it says here, as regulatory expectations deepen, firms are embedding compliance logic into core infrastructure. Middleware solutions offering identity attestation, jurisdictional wallet whitelisting, and audit-friendly data flows are becoming critical for project survival, not just for securing licenses, but also for onboarding institutional partners. By mid-2026, we expect at least 3 Tier 1 jurisdictions to adopt formal RegTech accreditation frameworks, which with licensing, APIs, and open compliance registries, functioning similarly to open banking standards. These systems will allow institutional actors to plug directly into regulated crypto. Again, there's that key vocab word. And what did I already show you guys? Metal allows what? The ability to plug and play right there, right? So when you come back over here to the doc and you go into detail into it, now let's look at what the Metal blockchain white paper says. It says right here, the subnet architecture of the Metal blockchain allows for the creation of private subnets where only certain predefined validators are allowed to join. This is useful for organizations that want to keep their information private, as the contents of the blockchain on these private subnets would only be visible to validators who are members of the subnet. This is where the identity attestation comes from, right? This ability to create private subnets is a valuable feature for the Metal blockchain, as it enables organizations to securely and privately conduct transactions and maintain their data on the decentralized network. It also allows for the creation of a customized permission network that can be tailored to specific needs of different organizations. That falls into the jurisdictional whitelisting. The subnet architecture of the Metal blockchain makes it easy to manage regulatory compliance. As mentioned earlier, a subnet can require its validators to meet certain requirements, such as being located in a specific country, passing KYC AML checks, or holding a certain license. So everybody thinks that there's going to be this global regulatory standard in crypto, but in reality, each jurisdiction is going to have their own set of rules and standards. And the blockchains that are going to survive are going to be the ones that can adjust to each different jurisdiction and, government and organization standards that they have to abide by, right? And boom, it's telling you right here that Metal blockchain has the ability to do that. It says this flexibility allows subnets to tailor their operations to comply with local regulations and requirements. It also enables the creation of subnets that are specifically designed for compliance, making it easy to ensure that transactions on the Metal blockchain network are conducted in a legal and compliant manner. Drops the mic, right? This is physical proof that the technology exists. Now, I'm not saying that it doesn't exist elsewhere. I'm just here to show you guys that Metal blockchain is a prime example of it.
100%. And they're the ones that have BSA compliance. And BSA compliance matters. That's what's aligning KYC, AML. You know what I mean? Like when you're operating here in the United States, BSA compliance it definitely matters. And when you look at, all of the cash apps that we use now to move money, like Zelle, PayPal, Venmo, Cash App, they're all BSA compliant, all of them. So, this being plug and play technology that is also BSA compliant, this aligns 100% up with the banks and the credit unions. So
can you share your screen and can you go over for the people listening the importance of BSA compliance and why that's even relevant? What BSA compliance and what it is that actually allows, right? What we were talking about off topic.
Yeah, hold on. I had a tab open I want to share. All right,
why so it's important.
All right, so it says here, you can see my screen?
Yeah.
It says, what is the Bank Secrecy Act? One particular requirement of the Bank Secrecy Act is the financial institutions are obligated to report cash transactions exceeding $10,000 within a brief period, regardless of whether they occur in a single or multiple transactions. So that whole thing that a lot of people talk about as far as hey, when I go to the bank and I'm trying to deposit or withdraw more than $10,000, this report is going to basically get filed and it's going to go, into the file books. So that's where that's even coming from. It's stemming from the Bank Secrecy Act. But let me just read what this says here and kind of go back in history. It says, the Bank Secrecy Act is a crucial U.S. regulation that outlines required record keeping and reporting practices intended to fight against money laundering. It was first implemented in 1970, but remains one of the key grounds for the global regulatory landscape. It also known as the Currency and Foreign Transactions Reporting Act and is sometimes called the Anti-Money Laundering Law. The Bank Secrecy Act is developed by the Department of Treasury Financial Crimes Enforcement Network and lays out specific conditions that must be reported. The BSA requires institutions to identify and monitor potential money laundering activities and report them to the authorities for further investigation and prosecution. Specific BSA AML compliance program rules. So it says here, file reports of cash transactions above 10,000, keep records of cash purchases and negotiable instruments, report suspicious activity that might signify money laundering, tax evasion, or any other crime. the Bank Secrecy Act is undergone by multiple amendments over time to adapt the changing financial landscape and evolving strategies employed by criminals. Currently, the BSA collaborates with the Patriot Act to combat money laundering and terrorist financing. And, you know, as I read that too right now, I just can't stop thinking about what you know, David Schwartz has actually said about the XRPL. He said it's a thorn in his side that they can't use it because they're a regulated institution. So it's BSA compliant getting in the way. You know what I mean? So this all makes sense to me 100%. You know what I mean?
Do you have a video timestamp of David Schwartz saying that off the top of your head? You could find quick?
Yeah, give me a second. I'm gonna find it right now. I got you. It's in my notes.
I know we got timestamps for fucking everything in this community, man. I love it, dude. It motivates me, bro, that we got timestamps for it. I swear to God, dude. So because you're saying while you're finding that, dude, I want to share this real quick because, you know, I want to show people that they're discussing this BSA compliant matter in the regulatory framework right now. If we come over here, this is the strengthening. And for those of you who don't know, right, the metal blockchain is the only, if I'm not mistaken, blockchain with BSA compliance right now, right? No, am I correct, right? Pretty sure.
Wait, repeat that one more time, brother.
Metal blockchain is the only blockchain that's BSA compliant.
1000%. 1000%. There is no, I've scoured, unless there's something that's hidden out there that is also BSA compliant that they have not announced to the public. I have not found another blockchain that is BSA compliant.
Well, here's this document from the White House, Strengthening Americans' Leadership in Digital Financial Technology. And then right over here, they talk about this, you know, Congress needs to clarify whether or not these, you know, these money transmitters and these software providers need to be BSA compliant or not. And so what if in the near future, when regulations become more strict and stringent, they're like, hey, you know, these money transmitters and these software providers, they have to meet BSA compliance standards. Well, boom, there you go. Metal blockchain's already done it. You know, so it says right here, Congress should codify principles regarding how control over an asset impacts the Bank Secrecy Act obligations, particularly for money transmitters. A software provider that does not maintain total independent control over value should not be considered as an engagement in money transmission for purposes of the BSA. So they're saying, according to this document, that money transmitters and software providers shouldn't have to pretty much abide by this. But what if Congress comes out and says they do, right? What if Congress comes out and says, hey, look, y'all got to be BSA compliant? It's speculation at the end of the day whether or not they do or don't, but wouldn't you rather invest in a technology, at least to some degree, have exposure to a technology that is BSA compliant, right? I know I would. I'm just saying. So that's the way that I see it, right? Another reason supporting why I'm, you know, personally exposing myself to metal blockchain. Did you find that post, bro?
I do. Hold on. Let me just get to the part right now. Hold on. I'm going to mute myself for just a second, but I have the video.
Yeah. Okay, cool. Well, while you're doing that, I just want to give a shout out to everybody on our Friday call today. Thank you guys so much for coming out. If you are a late listener, make sure that you guys go back and check out the beginning of these calls because we covered some really juicy stuff. We took a look into some perspectives from industry leading experts, showing you all how massive the opportunity in the underlying DeFi ecosystem is in crypto. We gave perspectives on how huge the lending and borrowing and posting assets as collateral space is in traditional finance. We then showed you guys from an institutional standpoint that they are 110% going to be interested in not only mandating that institutions participate in yield generation through treasury mechanisms and through this, and that, but that they're going to need to be node providers, even so in some cases. And that should just, again, motivate you guys to be like, wow, if these institutions are getting involved, we should get involved, right? Because we showed you guys physical proof today from an institutional standpoint that we as retail traders are front running the institution. Sandy Kuo literally said on stage at an event just like 3 weeks ago, this event right here, if you're a retail trader and you're involved in crypto, you're freaking front running the institutions. You're smarter than institutions right now. She even said you're doing more than institutions. You have more capabilities than institutions. She literally laid it all out on the table and said, look, retail front running, institutions are catching up. That should make a light bulb go off and be like, oh shit. Well, if Cypress and Aqua are showing me that institutions are about to flood into DeFi, shouldn't I get educated about DeFi and crypto and not just hodling crypto, thinking that that's going to be the success mechanism in the future moving forward? If all these institutions are going to be generating revenue with their digital assets, don't you think you would want to compete against those institutions that are actually moving the markets and controlling the flow of money and whatnot? I'm just saying, again, hopefully you guys on this call have had that aha moment with us today. We do appreciate the love and the support for you guys coming in and tapping in with us on these Friday calls. It's always love, good vibes here, and just good, solid foundational research. Anybody wants access to this research, you guys can always access it in the CYPRX research section of the Discord. Head over to CYPRXtrading.com. You guys can see the banner up there. Check it out. Try it out for a month. You don't like it, cancel your membership. You do, stay, right? It's a family. It's a good community. It's a great educational platform that we built with inside CYPRX to get you guys to see the realness behind what's happening behind the crypto curtains outside of just the mainstream speculative bullish moonboy price predictions. Also, we've talked about putting your digital assets to work for you. In this particular case, we talked about the Metallicus ecosystem and how every digital asset can be generating you passive income. You want to see how that's possible? Again, head over to CYPRXtrading.com, tap into the Wealth 28 Club. If you guys don't want to take the mentorship route, you don't want to join our paid community, that's fine. Myself and Aqua have so much free content on the internet right now that you guys can go learn from and gather resources from with just our YouTube and our Twitter alone. So make sure that you guys go out there and follow us both on YouTube and on X. Again, we do appreciate the love and support. Aqua, what is this video of? And again, kind of remind me the context of why it is that we're bringing this up in terms of what David Schwartz here says.
Okay, so pretty much I just broke down what BSA compliance is, right? And from what we've just discovered, who is most aligned with banks and credit unions right now because they have this API plugin and they are BSA compliant is the Metallicus ecosystem. We hear, that other coins like stable coins and, XRP is a banker's coin. But from my new understanding and where I'm seeing things from this BSA compliant point of view now, I'm like, how are you guys going to get the banks to use the XRPL if you guys are not aligned with BSA compliance? And, don't take it from my voice, like literally David Schwartz says it in this video. So it's like the way I'm interpreting this, right, is that we've heard them say, hey, we have institutional DeFi relationships, right? We have institutional relationships. Okay, so if you have institutional relationships and you guys are an institution as well, but you guys cannot use the XRPL, how are your relationships going to be able to use the XRPL? That's just my logical thinking, right? And, again, let me just play this short snippet of David Schwartz saying that Ripple themselves cannot use the XRPL. So I'm not trying to FUD XRP. I'm just thinking that we're not understanding the real use case of XRP and calling it a banker's coin. I don't think that's correct as of right now. I don't know. And that's just
based off of what Schwartz is saying too. That's
based off of what Schwartz is saying too, 100%.
Another thing too, because I don't want to forget, I'm going to find it real quick. I remember Marshall Hayner in a video in a panel discussion that he did the other day with a Congress representative and the gentleman from Bonify say that for the first time ever, their partnership with Bonify and Metallicus is the first time in history that banks have been able to integrate blockchain technology with core banking infrastructure.
100%. 100%. Yeah.
So can you play the
let's play this so we can get some more context of where I'm like, why I even brought that up. But this, and what I mean, again, BSA compliance is the main topic that so many people in crypto are missing. Everybody should be talking about who is BSA compliant. But listen, I mean, David Schwartz doesn't mention BSA compliance, but in a nutshell, he's basically talking about them not being able to use the XRPL because it's not BSA compliant. So listen.
Can you take it and slow it down to 90, bro? So it's
absolutely.
Schwartz talks fast as shit. Put it down to in the settings to like 90 speed.
Okay, hold on.
Take the little slider and put it to like 90. This motherfucker talks so fast.
Nah, you ain't capping. Hold on one second here.
So I didn't mean to call David Schwartz a motherfucker. If you're ever listening, David Schwartz, I'd love to have a conversation with you.
All right, so listen, here we go. David Schwartz.
significant. You know, a thorn in my side and a thorn in the side of Ripple for a long time has been the fact that we can't use the XRP Ledger DEX for our own payment products. Like this just, I want to rip my hair out. So like it's obvious that we would do that. And it's frustrating that endlessly frustrating that we can't. And the primary obstacle is that Ripple is a regulated institution.
Right.
And if our trade like passes through a terrorist or somebody who's sanctioned by the United States, it doesn't matter whether we knew or could have known, or basically if there's a chance that that can happen, we just can't do it.
Right.
And so we have not been able to use the DEX. And it's just,
So, okay, dude, this just brings so much speculative shit to rest right now for now, because the thing is that David Schwartz, I do have to give him credit, is he's saying that right now that's how things are. So that doesn't mean that that's how things are going to be in the future, is if things change and if they can fix whatever the reason is why they can't use the XRPL DEX right now. But like all these people that are telling you guys that, you know, XRP's price is going to go skyrocket high because banks and institutions are going to start using, you know, the freaking DEX and all this blah, 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 blah. David Schwartz himself just said that they can't even do that. So
yeah,
who are you going to believe? The speculative bullcrap or the researchers that are actually showing you all the juice? And me and Aqua hold a lot of freaking XRP, y'all. Like we're not like little tiny XRP, little tiny, like you know, I'm just saying, like, we got a lot of XRP. We're not bashing it, but we're open to other technologies. And that's what you guys have to understand. It's not just about one technology to rule them all. And if right now the XRPL DEX ain't ready for financial institutional adoption, according to what David Schwartz is saying, what technology is? Because these banks aren't waiting, you know, they're coming.
They're not waiting. And as you can see here, this is the XPR network. This is the explored blockchain, right? Where you can come over here and explore the chain yourself. And, you know, just from doing research with myself and a lot of members in the TDBN community and DeFi King, shout out to DeFi King as well. We're starting to see these brand new trust lines pop up on the XPR network, the live chain, not the test net, but the live chain. And I believe it was a couple of weeks ago, I think I shared a couple of these trust lines, but long story short, these trust lines go directly to the banks that are in this Metallicus banking innovation program, right? Hold on. What the heck happened there? Can you guys see my screen? Hold on. What the hell? What the hell?
I'm muted. We can see the XPR network screen where you're showing the trust lines.
Okay. Man, you know what? I was trying to like tab over and I hit my computer literally froze right now. Hold on.
That same thing was happening earlier to me on the Zoom call when I was talking about the demand that's about to come for XRP and the DeFi ecosystem when we were having the private Zoom call this morning.
Yo, my computer, I'm not even on the tab of the StreamYard right now. I'm on my Metallicus tab. Luckily, I didn't mute myself because I would have been on mute and I can't even get into this tab right now. That's, man, hold on. Let me see here. Maybe I just stop sharing.
Yeah, stop sharing and reshare, bro. I know you showed me a little bit of the credit unions that have the stable coins built out because they're stable coins, right?
They're stable coins for sure. They're stable coins. Yeah.
Yeah, they're stable coins built out. And then remember, y'all, I just showed you that document from what organization was that? Hold on, let me just make sure I'm not giving you false information. The PCMI. And they were talking about how these financial institutions are going to need to be ability to embed finance in the blockchain infrastructure into their own infrastructure, fiat on and off ramps, plug and play, or what were the highlighted key vocab words, and then the ability to create their own stable coins. And Metallicus just got awarded that freaking they're the finalists. They didn't get awarded it yet. I need to make sure I'm correct on that because the award ceremony is not until November 6th. But they've been named as the finalists for the two awards for the CU Time Luminaries Awards. And one of the reasons is because they're given fucking credit unions the ability to issue their own branded stablecoin.
Literally.
Compliant. The crazy thing is too, is they're giving banks the ability to issue their own branded compliant stablecoin. So like if some fucking bank is like, hey, we want to issue our own stablecoin, they just tap in, plug and play to the Metallica's ecosystem, build it out, name it what they want, it's compliant, boom, it's good to go. Aqua jumped off the call. That means that his stuff is probably lagging. So we'll wait for him to hop back on before he shows some stuff to you guys. Yeah, here he comes. Bro, your computer's tripping, bro. Get it together, dude. Get it together.
Dude, this is my brand new computer too, bro. I ain't gonna lie. I think there's something because like, yeah, I just came out. I went out, came back in, and I can't even see the screen. Like the whole screen is black for me. So hold on, let me see something. I don't mind the screen being black. Maybe I can still share my screen. If you could see it, then that's all that matters. Hold on.
We're dropping too much sauce, y'all.
I was just gonna say that too, bro. I swear.
We're dropping way too much sauce. It's cool anyways, because we've been on here for like an hour and 30, but I was definitely interested to see the connectedness of the trust lines with the credit unions.
Yeah, hold on, bro.
Yeah, take your time. Take your time. Take your time.
Shut down tabs right now. So
yeah, that thing too that you were talking about earlier with the Juniper, is it Juniper Payments?
Yeah, it's Juniper Payments. It's on the FedNow provider list.
Well, while you're getting that pulled up, I guess I'll go back to this video clip of Marshall Hayner saying, we haven't really until the Metallicus and Bonify partnership seen the ability for credit unions or banks to have a direct integration into the blockchain. So when I hear things like that, I'm sitting there thinking, and I'm like, well, if Marshall Hayner in 2025 is sitting here saying that his partnership with Bonify, then you go look at when that partnership was relatively recent. They haven't had the ability before then to, let's get Aqua back on. They haven't had the ability for credit unions or banks to have direct integration into blockchain up until that partnership. Then what the heck have all these other projects been screaming about integrating into banks? If Marshall Hayner is sitting here saying that this one partnership is what has now allowed banks to be able to do this for the first time. So while Aqua's getting his stuff together real fast, let's just play that video clip. And this is from a panel discussion on Trade Talks. That's from, I don't know, maybe like a month or two ago, or maybe 4 months ago at its longest. It's from 2025. So take a second here and listen.
Credit unions, and bringing on those 80 credit unions. What are some of the more tangible challenges you can tell us about?
Yeah, so I would say, blockchain and banking have kind of been in two different camps for a while, where you have your metal pay or you have your Coinbase or your Kraken, and you move your funds to that intermediary, and then you can go to the blockchain. We haven't really until what Metallicus and Bonify are working on together have seen the ability for credit unions or banks to have this direct integration to the blockchain. And in order to get there, we need to have guardrails. We need to have better systems in place. And something
and bringing on those.
So you heard it there from him. This isn't my speculation. It's just me pondering on what he said more so, is that if he's saying for the first time ever, banks now have the ability to integrate blockchain into traditional finance with this partnership, then what does that mean for everything that has been announced before? Is it all just a fugazi? I don't know. I'm just, I wonder when I hear things like that. And then that makes me want to do more research, which is the research that I share with you guys today, that the Metallicus ecosystem in the middle blockchain has exactly what these financial institutions need. Exactly. All right. Aqua, did you figure out your technical solution, or are we cutting it for the day, bro?
Yeah, my computer, I'm gonna have to restart my computer right now. My computer is like super tripping. I can't even see the screen like I normally do on this stream tab. And when I click share or present, it takes forever to pop up here. So
yeah, bro, they shut us down. It was too juicy today. Honestly, we'll save the juice for next Friday. Next Friday will be together, no?
Yeah, for sure. We should be. Depends on.
Yeah. So next Friday we get the link up. So honestly, what we'll probably do next Friday is for real is have a whole bunch of people in person on the podcast, low key. Because next week, because I got the setup, so we might just have everybody with a mic, just have a whole little live setup roundtable,
That'll be dope, dude. I ain't mad at that, dude.
Yeah,
kind of like what we did with Mr. Man.
Yeah, that'll be cool. But yeah, so blessings to you guys. I think we'll cut it there. We've been going on for about an hour and 40 minutes, but we really do appreciate you all for coming out and tapping in. Bobby said solid content, gentlemen, working on some overtime this weekend. Probably put that towards getting into your Wealth 28 Club. Your mentality towards your viewers as well as humanity as a whole is enlightening, man. I'll tell you what, Bobby, brother, you come into our community and it's the same energy with everybody in there. Everybody's motivating each other. Everybody's grinding. Everybody's working hard towards something. So much good information in the community. Come lock in with us. You guys know where to find us up there at the top, CYPRXtrading.com. You can tap into the Wealth 28 Club or the private Discord. Try it out. They're both subscription models. That way, if you guys don't find it of any value, you can always cancel. But I at least encourage you guys to try it out for a month because I promise you guys with 100% guarantee that you will want to stay to some degree for some type of piece of information that we give in the community, whether it's the fundamentals, it's the institutional deltas that nobody else on the internet has access to except our community. It's the research. It's the Zoom calls that the DeFi mentors give all throughout the week. It's the camaraderie. It's the friendship. It's the freaking space in detail that we're building. Lock in with us, guys and gals. You're not going to regret it, and you'll only learn and grow as an individual and in your investing career. With that being said, that's all that I have for you guys today. Seriously, do appreciate you all. We'll hopefully see you guys next Friday. That's not guaranteed. I know that we got the CYPRX Wealth 28 Club link up. So depending on things, we might do a Friday call next week. We might not. But with that being said, we'll definitely see you guys possibly the Friday after that. As always, that's all I got, Aquaman. Appreciate your time, brother.
Yeah, much love, man. I'm about to restart my computer right now. My bad, dude. This sucks. There's something I was gonna show some sauce right now to pull all this full circle and just show that it's already happening right now.
We'll save it. We'll save that for next week, bro.
Yeah, we'll do it next week. That's fine.
All right, man. Blessings to you and blessings to everybody on the call. You guys take it easy. Have a good weekend.
Later. Much love.
All right.